Hello, everybody, and welcome back. Today, my guest is Robert St Clair. Robert is a strategist at Fullerton Fund Management, and today we want to discuss the Asian century and trends in Asian financial markets. Welcome, Robert.
Yes, welcome. Great to speak with you. Thank you.
Robert, Asian earnings growth has suffered from the COVID-19 pandemic dramatically. So how long-lasting is this effect on the Asian economies and on Asian growth?
Yeah, so you are right. I mean, the cyclical headwinds for Asian corporate earnings this year have actually reflected three key factors. So as you pointed out, the first one, of course, has been the adverse impacts from the COVID control lockdowns. Secondly, we have had sharp rises in energy prices and raw material costs, which has driven cuts in spending and weaker corporate revenues. And then thirdly, there is the weaker external demand as developed market growth is slowing, especially across Europe. So the adverse impacts from the COVID control lockdowns, especially China, did spill over to weaker trade flows. And as a result, corporates across all of Asia suffered, and Q2 was especially painful as the regional equity markets fell quite sharply on weaker growth. But of course, much of that pain has passed as the economies have reopened from lockdowns. And while China's ongoing zero tolerance COVID policy is a headwind, it may not prove to be as acute as what we saw over the first half of the year. But nevertheless, some of the other cyclical headwinds for Asian corporate earnings could last a bit longer. So, for example, China's policy stimulus is still struggling to get traction in sustaining the recovery. And as a result, growth expectations for this year are a lot lower than the original 5% growth target that policymakers had hoped for. And at the same time, of course, external demand is quite weak. But I guess the factors that are more positive at this juncture is that Asian corporate earnings could get some relief from the falls in oil prices. And of course, going forward, the competitive advantage that Asia has over developed markets where the CPI pressures is much greater will also be important. And I guess the last encouraging factor is that any potential recession risk in the US economy may prove to be shallow, which means the US demand for Asian exports could hold up better than expected. And at the same time, of course, Asia's tradable goods sector, its competitiveness will benefit from lower inflation pressures and US dollar strength.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
Let's talk a little bit about the findings of your recently published research paper. So Asia is known to be very innovative. And which countries stand out with their innovation potential, and in which sectors is innovation happening there?
Yeah, so you are right. I mean, as Fullerton shows in the investment paper that we looked at Asia's rise on the global stage and the emerging opportunities and trends, Asia is very innovative. And I guess what may come as a surprise to investors is that Asia, excluding China, actually ranks quite highly on global innovation scorecards. So for example, what stands out from the Bloomberg Global Survey is that there are 4 Asian countries that are ranked in the top 20 of the innovating countries. So we have South Korea at number 1, Singapore is at number 2, Japan is at number 12, and China is at number 16. And to give a comparison, the US ranks number 11. And so I guess what the innovation data also reveals is that Asia does have a broad range of global leaders across sectors like high value-added manufacturing, semiconductors, healthcare, and of course the newer industries like fintech and renewable energy. And I think it's also important to emphasize that Asia's logistics sector is also very productive. And there we have 8 countries in Asia that are ranked in the top 20% of performers by the World Bank. So that ranges from Singapore to Japan, Hong Kong, South Korea, Taiwan, China, Thailand, and Malaysia.
Venture capital investment in China is almost on par with the US. Incredible. And it's 10 times more than the third place country, the United Kingdom. So what does this tell us about future competitiveness of those countries?
Yeah, so you are right. I mean, Asia does account for almost half of the new global investment in startups. And as you highlight, venture capital in particular in China is very significant. Last year, it reached an all-time high of around 130 billion US dollars. I think that having a significant pool of venture capital is an ingredient that can help boost future productivity. Researchers typically find that stronger productivity is a key determinant of better earnings growth and performance for investors. And I guess that, stronger competitiveness can, of course, come from innovation and higher levels of R&D spending. The Bloomberg Innovation Survey does reveal that the most important driver of stronger innovation and productivity growth is actually the number of active researchers that are enhancing R&D across the economy. So certainly that is where having a deep pool of venture capital can really help motivate that.
Historically, China has been the factory of the world, but China is moving up the value chain towards higher-end manufacturing now. So who is benefiting from this trend in Asia currently?
Yeah, so you are right. China is progressing up the value chain. And as the economy matures and rebalances more towards consumption, we believe that Asia can benefit in two ways. So firstly, Asia's faster growing and competitive manufacturing countries like, say, Vietnam, India, Indonesia, and Thailand, they can all fill China's manufacturing gaps, especially across the more labor-intensive manufacturing. And then when it comes to the exporters, Asia, of course, will benefit from greater consumption demand from China and from stronger intra-regional trade growth. So we believe that these two key trends do create important investment opportunities across Asia's labor-intensive manufacturers, as well as across the more developed and richer economies that are producing consumer goods for China, especially the higher end brands. That's countries like South Korea and Singapore.
You found that Asia's e-commerce companies are considered more productive than the rest of the world. So why is it the case, and what can the world learn from Asia here?
Yeah, I think it comes down to a lot that when you think about the performance of e-commerce companies, what is really important is to have strong and efficient logistics infrastructure and supports. And so I think one area where the rest of the world can learn from Asia's experience is the efficiency of its logistics. So as we kind of outlined earlier, there are actually 8 Asian countries that are ranked in the World Bank's top ranking for logistics performers. And I think more generally, the Bloomberg Global Innovation Research data also reveals, as I say, that the single key driver of stronger productivity growth is the number of active researchers that are enhancing R&D. So when you step back and think about it, that could seem difficult to map directly into the payoffs for e-commerce firms in particular. But I think a key takeaway for the rest of the world is that spending in R&D is probably the single most important factor to boost productivity for all industries across the board. And we do see evidence of that in Asia's experience. We have the highly ranked productive countries outside of China's mega e-commerce players that have actually produced quite successful e-commerce firms. That's firms like Lazada and Shopee, of course, based in Singapore. And of course, Asian e-commerce firms do benefit from scale. So 60% of the global population is Asian. And of course, Asia accounts for around half of global internet users. So it does follow, I guess, that Asia is well positioned to embrace not just e-commerce, but also new innovations in IT and in the metaverse.
Asia's middle class is rising. So what are the differences in consumer trends in China, India, and ASEAN? And what long-term consumer investment themes do these regions have in common?
Yeah, so I mean, you are correct that Asia's middle class is rising significantly. It's already overtaken those of Europe and North America back in 2015. And then by 2030, Asia will account for almost 60% of the global middle class consumption. I think if we think about the richest ASEAN countries like Singapore and Malaysia, they already have higher per capita income than China. And so therefore they tend to consume larger proportions of consumer discretionary, hotel services, travel, and branded and luxury type consumer goods. But if we think about relative spending across ASEAN in aggregate, and that's reflected in the GDP per capita, is behind China and back at about levels where China was in 2010. And of course, India lags further and is back at levels around where China was in 2006. So I think, what that means looking forward is that China is quite unusual in the fact that despite its size, its consumption is only about 40% of GDP, whereas India, its consumption is around 60% of GDP. And of course, a big part of that difference reflects, China's historical growth being driven by its leading role as a factory to the rest of the world. But it also does mean that there is significant longer-term upside to China's consumption as its income continues to grow and as the economy rebalances itself more towards domestic demand. So that is likely to create long-lasting opportunities for investors across the whole gamut of retail activities and especially for e-commerce. If we think about what's in common, China, ASEAN, and India all have the common trend of rising per capita incomes, which will drive consumption over time. And I guess it's also important that because e-commerce activities are important in Asia, they're a large share of total retail activities that does enable both high and low income households to push their consumer dollars further. But of course, it will take time for the other countries of ASEAN and India to reach income levels where they can consume significantly greater proportions of higher end consumer discretionary products. That could take sort of another 10 to 15 years to reach those levels.
And eventually one final question for you, Robert. Besides consumption, where do you see the most interesting long-term growth and investment opportunities in Asia?
Yeah, so as we try to emphasize in our investment paper on Asia's rise in the global stage, we do see opportunities in healthcare, in technology, high value added industrialization, that's especially across China, Taiwan, and South Korea in semiconductor areas, but also in India with IT services. And then, of course, we have the green transition and fintech. Of course, some of these investment themes are likely to get an additional boost from the structural changes that we see post-COVID with more spending on healthcare and, of course, as households demand more online IT services. There are greater geopolitical risks today, and that could reinforce more deglobalization, but also push countries across Asia to step up their infrastructure spending to help defend supply chains, which of course will also create additional investment opportunities. And I guess the other key takeaway that we would emphasize is that Asia has a lot to offer investors beyond just China. We are blessed with 4 countries that are growing per capita incomes at a fast clip. That's Vietnam, India, Thailand, and Indonesia. And of course, Asia is heterogeneous, so it offers a lot of different options to different investors. We have the fast-growing countries that offers opportunities across infrastructure and labor-intensive manufacturing. And then, of course, the more advanced and more mature economies tend to offer opportunities across the higher value-added production, services, and consumerism. Of course, given the sheer size of China, it's the second largest equity market in the world. It is always going to be on the investment radar. But as you've outlined earlier, as it's progressing up the value chain, the opportunities will change over time. And of course, Asia can benefit from stronger intra-regional trade, supply chain supports, and a stronger China.
So this was Robert St Clair from Fullerton Fund Management. So thank you very much, Robert, for being with us today and sharing your thoughts on Asian century and Asian financial market trends.
Pleasure to speak with you. Thank you.